What is going on, traders? So much has changed over the course of the last week. You definitely want to pay attention. This will be the only video you need to get you prepared for the upcoming week in the stock market. Now, we had that October 10th daunting candle here, and we were trading inside of that for almost 2 weeks. We finally broke out of that last Friday. And just as I was recording this, it looks like Trump and China have preliminarily agreed to a deal with regards to rare earths. Now, this couldn't come at a better time, as a lot of the momentum stocks, the data center stocks, the crypto related stocks, the rare earth stocks have all been retracing for the last couple of weeks, which means that this will likely set up a ton of opportunities through the year end, and we want to take advantage of those opportunities, so stick around. In this video, we'll go over the critical news for this week, the China rare earths deal, the potential removal of those 100% tariffs. CPI came in line, of course. There is no way that the new acting BLS chief was going to risk having a hot CPI right before a Fed meeting next week. Speaking of the Fed will likely cut rates next week, as well as reduce quantitative tightening. This means going back to easy money or easier money than it has been for the last couple of years. We also have some Mag 7 earnings. We have Meta, Microsoft, and Alphabet reporting Wednesday after market close, and we have Amazon and Apple reporting Thursday. That only leaves Nvidia, but they report weeks later. And like I said, we finally traded above the October 10th candle, so we broke out of that ugly range. Now, it is a stock market. We are obviously in a bubble, and we are in an environment where news headlines do drive a lot of the price action. However, that, along with the VIX crashing below 17, which was the level from October 10th, does signal that we are entering the Q4 scenario where we have a lot of tailwinds behind us. We have earnings, guidance, a Fed cut, the announcement of a reduction in quantitative tightening, the potential deal with China, and of course, the government is still shut down, so we don't have any data to counter that. So in my view, as we said in the last couple of videos, if we trade above that October 10th range and we break out of that with the VIX crashing, the bubble will likely continue into 2026, in my opinion. So if you are risk on, I'm going to tell you where you want to be positioned. As I said, a lot of the power stocks, the data center stocks, a lot of the crypto plays, a lot of the rare earth stocks, a lot of the AI software stocks that are not Mag 7. These all entered a significant pullback or correction within the last couple of weeks. We will also be going over the playbook and game plan for the week, and I'll tell you what I'm buying and what I'm trading. Side note, I didn't know a lot of people were that big of fans of silver. When I said that I expected silver to crash, and silver did end up dropping by 13%, by the way, I got so many comments saying either how wrong I was, which is fine, we can disagree, but how idiotic it was.
What?
Some people almost seemed offended that silver was likely going to crash. I don't know. We're not in this for feelings, guys. We're in this for objectivity and to try to squeeze money out of the markets while maintaining a risk managed plan. Let's get right into it. So first we'll jump into the news, and then I'll talk about the technicals and the plays later. So the latest news is that China and the US reached trade consensus. China's Minister of Commerce, Li Gang, announced that China and the United States reached a consensus on key trade issues after candid and constructive talks in Kuala Lumpur. Now, Scott Bessent offered a little bit more detail, and he said they had threatened to put a global export licensing regime, and I believe that they are going to delay that for a year while they re-examine it. He's talking about rare earths, so there might be a 1-year delay on those rare earths export controls. Now, just logically thinking about this, if we're going to delay that for a year, then this might mean that the Trump administration is going to push for investments so that we can start refining rare earths here and not be so dependent on China. There might be major opportunities in some of those rare earth stocks that dropped, and will likely, I don't know if they will drop on this news, but if we do see a little bit more of a sustained drop, I think that will be a welcomed opportunity, because in my view, the way I'm thinking about it is that the administration will likely aggressively push for rare earths refinement in the United States. So stocks like Quad U, which is Energy Fuels, MP, METC, USAR, there might be opportunities in those stocks. Obviously, as the week progresses, we'll have more news on the China-US deal. And if it warrants a video, I'll definitely bring that to you guys. Now, CPI came in line. Now, this is not a surprise, and I was again surprised by how many people disagreed with what I had to say about CPI likely coming in line because the new BLS chief cannot afford for CPI to come in hot. So we had weeks of no data, and the BLS said, no, we are going to release CPI. If you guys recall, the Trump administration fired the last BLS chief because Trump didn't agree with the way that she and the BLS were putting together the employment numbers. If you remember, there was that huge revision of employment data where the employment data came in showing that at least 900,000 jobs were not, as a matter of fact, created. So on Twitter, I said, if CPI comes in super hot tomorrow morning, there is no way the Fed is going to stop QT, and there's no way that they cut rates next week. So my bet is that because they were so eager to release it during a government shutdown nonetheless, that likely the CPI was going to come in line plus or minus 0.1%. CPI magically came in at 3% versus the forecasted 3.1%. Therefore, we're going to get rate cuts next week. And of course, I will be live on this channel covering FOMC and trading it live with you guys. And I just want to pause real quick and tell you that I'm doing a free 2-day live accelerator. We're going to be going over options on the first day. I'm going to be teaching you everything that I know about swing trading and day trading options. And the second day we'll be going over futures. And I'm going to be telling you how I day trade futures. So if you want to gain a next level understanding and take your trading to the next level, especially because we're close to year end and you want to start 2026 with a bang, make sure that you sign up for the 2-day trading accelerator live event below. If you do not register, you won't be able to attend. Yes, it is free. Make sure you sign up, get your name on the list, and I will see you there. And as I said, the Fed is expected to cut rates next week. Now, they might announce the reduction of quantitative tightening, which means quantitative tightening is when you let assets roll off the balance sheet, and the Fed might stop rolling assets off of the balance sheet. And who knows, they might even get into buying assets once again. I don't think that that will be the case for this Fed meeting. They're going to do it in steps, in my opinion. At first, they will stop completely the rolling of assets off the balance sheet. And then likely by next year, they will start buying treasuries once again in order to improve the liquidity in the treasury market, bringing down rates, pumping money into the economy. And like I said, Mag 7 reports next week. Meta, Microsoft, Alphabet on Wednesday, Amazon, Apple on Thursday. Now, some of these companies don't report guidance, but what I'm going to be looking for, I think every one of these companies is going to beat on revenue and earnings. What I'm going to be looking for is a few things: Amazon, AWS numbers, and more importantly, whether Meta, Microsoft, Alphabet, and Amazon are going to be scaling back on their AI capex, how much they're going to be spending on AI, or whether they're going to be increasing or maintaining AI capex. Because once these companies start dialing it back, which I don't think will happen for this earnings cycle, I don't think we'll see companies dialing back capex, in my opinion, until at least next year. But the minute that companies start dialing back on AI capex, then I think we're going to start getting into bubble popping territory. Now, the reason that I don't think that these companies are going to be cutting back on capex is because we're still in an arm race stage. There's a news report. Record $38 billion of debt sale nears for Oracle-tied data centers. So Oracle is close to, or they might have already finalized it by the time this comes out. Oracle is close to closing in on a $38 billion debt deal to build data centers. Now, data center plays are part of the game plan that I have for the next few months. And we already made a killing on IREN last week. I'll disclose my play and I'll tell you some other plays in that market niche. But I don't think that a lot of people understand why these companies are building data centers and trying to improve compute at a massive scale, orders of magnitude. It's true that all AI has given us so far are chatbots, right? Which they are amazing. ChatGPT is great. Google Gemini is great. But are chatbots going to make up in revenue for the amount of spending that these companies are doing? No, of course not. There are many more application layers that are going to come. There are many more real world AI applications that are going to come. Think about the healthcare sector, obviously autonomous driving. We don't even have to name all the sectors. Every aspect of your life is going to be impacted by AI. But in order to start building the application layer and to start seriously thinking about building the real world applications, you need the hardware as the base. You need the compute power. That's why all these companies are spending so much money on data centers, and they need the GPUs as well as the power for those data centers so that they can start thinking about how to scale the application layer and make AI penetrate, or let AI penetrate into every aspect of our daily life, and thereby building new businesses and new revenue models on top of that hardware layer. And that is part of the reason why, as I've been saying to you guys in videos, that I think the bubble will continue for at least another year or two. And that's the exact reason why you're seeing some of these momentum names like IREN or CLSK or CIFR mining. A lot of these companies that are now data centers were Bitcoin miners, but Bitcoin mining is not a very profitable business, especially as Bitcoin's hash rate increases. And so these companies are like, wait a minute, we have cheap electricity. Some of these companies have the land. They have GPUs. They're like, wait, if we get some talented engineers, we can retrofit these mining centers into AI data centers where the profit margins are high, and we can start renting out this space to customers who want to take advantage of our compute and our electricity. All right, let's get into the technicals of the S&P 500 and the NASDAQ as we traded above the October 10th candle. I'll tell you what my market outlook is, and then we'll get into the playbook and game plan for the week. Hopefully this has been helpful so far. So as I said in the last couple of videos, right, while we're trading inside this candle, we are not out of the woods. And in my opinion, at that point, you definitely wanted to tread carefully and not open so many longs so many leveraged longs while we were in here. Based on seasonality, obviously I would have liked a bigger pullback. And I've said that time and time again. I said that in August, September, and now October, that I would like a bigger pullback. I think it's healthier. Not that I'm already 100% invested. So it's not like I want the crash to happen because I didn't buy anything. But one, maybe I would like to commit more cash. And two, I think it's healthier for the market if we do actually pull back by more than just 3%. And three, I know quite a few people who are watching this are waiting for a significant pullback because you are not fully invested. But I said at least according to my risk strategy, I was not going to be opening a ton of leveraged longs while we were still trading in this October 10th candle. And in my opinion, that was the right decision. Now, obviously, I'm still going to day trade as I shorted silver a couple of times and will likely take another silver short at some point multi-day. But now that we are out of the woods here, because we broke out of that October 10th candle, as well as what I talked about before, which is the VIX crashing below that October 10th low. It's not that the S&P 500 won't fall back into this range. It's that if you're looking at other setups now, like an IREN, for instance, which we netted over 50% on these calls so far, or you're looking at a Meta finally breaking above the support resistance line, or you're looking at a Hood or an ASML, right? These are stocks that what I'm saying is, if there is a setup, now that we broke out of that range, if you find a setup, in my opinion, I think it is a way more comfortable scenario to be in now than it was a couple of weeks ago. Now, one other thing is I shared this data with you guys back in April. This is from the account on Twitter, Subu Trade. Shout out to Subu Trade. But we are now at this exactly the 6-month range from when this data was dropped. So we talked about the Zweig breadth thrust indicator. Not going to get into what that is, but it is a breadth indicator that is rare, and it triggered on April 24th. Now, exactly 6 months later, as I said in that video that I did in April, that we will likely be green 6 months later, and we are green 6 months later. Look at the stats for the next 6 months. Also 100% green, and I expect that to be the case. So with that that said, for at least the next 6 months, I do expect the S&P 500 to at least hit that $7,000 mark. And with that, I think will come quite a bit of opportunity. So let's talk about the playbook for the week. Now, I mentioned IREN here. IREN is a crypto miner turned data center. This sector right here, I think, is going to catch a bid for the next few months because, as I said, there just isn't enough compute. There aren't enough data centers to support what the AI applications want to build. And whether these companies in 10 years will still be around, or whether, we come to find out that, oh my God, in 2025 and 2026, we built out so many data centers, we didn't actually need them. I'm just talking about short-term momentum and risk on trading here. I'm not talking about buying IREN and holding it for 20 years. So I'm looking at IREN. I am also in CIFR mining, which had a crazy 20% day last Friday. Now, the setup on these stocks, let's take a look at IREN once again. You could see that in momentum, right? When a sector or a stock is in momentum, it follows this path. And this has been the case since April, right? Bouncing off the 921, bouncing off the 921, here. We finally did get a pretty big pullback here of about 35% on IREN, going from 70 all the way down to 49. Just tagged under the 21 EMA. Now, the reason that I bought this is because we filled this gap at the 21 EMA. And if you look at the volume, we had the biggest buy volume ever. And what you want to see on retracements is this feature here of trailing volume. Now, I will be doing a separate video on AI build out stocks because there are many aspects to AI, right? There's data centers, there's power, cooling, and electrical, there's networking, there is the software layer, of course. So there are many stocks in each of these sectors, and some of them are in a better momentum zone than others, but I will be doing a separate video on that, so look out for that. Other stocks in and around this sector, Nebius, NBIS, right? Recapturing that 921 EMA, as well as a stock that I'm already in, which is CoreWeave, bouncing off of this weekly fair value or this weekly volume imbalance, as well as the 21 EMA weekly. Still not out of the woods on the daily. Would like it to cross above that 138 and potentially retest this for a move higher towards the 160s. So in general, I'm going to look at the best setups in this sector and try to leverage the swing trades for the next 2 to 3 months in this sector, obviously having profit targets along the way. And if you want to follow along and you want to get my exact plan as well as my live trades, link is in the description below. Not only do I go live every single morning and give you the morning game plan as well as day trade, but you get access to all of my swing trading playbooks as well as my long-term analysis. Now, another sector that I'm looking at in the AI space, as I said, is the application layer, the software layer, right? So if you look at Path, for instance, Path right here, we had a double top resistance, another area of resistance here at this like 1540 level. And you could see that we bounced off of the, I bet you we bounced off of the 21 EMA here. Yep. With the highest buy volume ever, trailing on this big retrace. And we now broke out of this bull flag or this channel. Another stock in the AI software sector that I'm looking at is Team Atlassian. Now, if you work in tech, you might be familiar with Jira, Confluence, etc. So this company builds those products, but it currently broke out of this almost year-long downtrend here, and Team is introducing new AI tools, AI assistants, AI chatbots into its B2B pipeline. Now, it does have earnings coming up next week, and I will be interested to see whether it can generate a consistent profit because it's something that it has struggled with, even though it generates pretty healthy free cash flows. Not yet decided on this, but the pattern definitely has caught my eye. CRM, which is Salesforce, is another one in a similar sector, but that does actually deliver some positive earnings consistently. And it has also broken out of a long-term channel. So far we have the data center stocks. I talked about the rare earths, which I think might set up. I'm not going to go into those setups just now, but I will be looking into it this week for the group. And we also talked about some of the AI software opportunities. Obviously, I can't list all of them here. And I will be looking at some of the AI related power stocks like Bloom Energy, Vertiv, Oklo. Again, we are trading and investing. So not every one of these stocks is investment worthy, in my opinion, for years to come, but we are looking to take advantage of short-term trends as well. As I told you guys in previous videos, Amazon and Meta were obvious buys for the long term here. And another thing that I'm looking out for here is crypto. I want to see if Ethereum and Bitcoin can recapture the last high that they made and finally break market structure to the bullish side. Because if we get a crypto run up in the winter, then I think stocks like BitMine Immersion, which is Tom Lee's fund, as well as MicroStrategy, will also catch a bid. And if we take a look at BMNR and we take a look at MicroStrategy, they're still coiling in these really tight patterns here. MicroStrategy not as tight. Obviously, it has a very wide triangle here, but BMNR is coiling in a very tight triangle. And MicroStrategy is coiling in the same way that it was back in 2024 before the big breakout. And right now it is currently sitting at support. So Bitcoin literally needs to catch a bid here, or MicroStrategy will likely break to the downside. So I need to see Bitcoin break market structure above 115, and I need to see Ethereum break market structure above really 4250 if we're being conservative, even though that 4100 level is previous major resistance. And if we take a look at Nvidia here, you can see that this major resistance at 185, this has been resistance on Nvidia for months and then has briefly acted as support, then again as resistance, and we finally popped above that on Friday. So I do want to see a break and a retest. And if the S&P starts heading towards 7,000, I think Nvidia will, by the end of the year, get to that 200 and above range. And I know I'm going to get questions about Beyond as I did before, but as I said before and I said on Twitter, I don't think Beyond is like GameStop or AMC in 2021. It just does not have the short interest and days to cover that those stocks, AMC and GME, did. Currently, the short interest float is in the teens, and the days to cover is 0.05, meaning it will take less than an hour for the institutions to cover the shorts on Beyond. Also, Beyond Meat opted for a debt to equity swap last week and reduced its $800 million debt burden, which means that this came at the expense of issuing more shares, 300 million new shares, representing a staggering 413% increase in the company's overall share count. So while you may be able to have fun with this and catch a couple of bids here, in my opinion, as of now, this is not at all like GME or AMC, and there are much easier, better ways to make money. To me, people that are YOLOing in Beyond full port are just really desperate. Anyway, traders, hope this was helpful. That is what is coming up next week. Hopefully I gave you pertinent info, what to keep your eyes peeled for, why I think the bubble will continue. If you are risk on, where do you want to look in the market? And I gave you some stock ideas, what I'm looking to pick up and trade this week as well. As I said, if you want the full list in real time and all of my analysis and all of my trades, make sure you join us at the Traveling Trader Academy below. Shout out to Shawnee, who's up 16% for the month and 100% year to date, as well as the other members, Torres, Ankit, who banked on the silver short that I was talking about, and Amanda D, who was not afraid to take advantage of AMD, ASML, Meta, and more. Her account boss status up 42% year to date. And just as a reminder, the S&P 500 is only up 15% year to date. So huge shout out to those members who are beating the index by a healthy margin. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.